Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. If you're interested in getting a free Axon Tire desk pad, which is similar to the mouse pad that you got last month, this desk pad is the same metric conversions, but it's big enough to put on your desk. And it's like one giant mouse pad. So have a giant mouse pad plus two. You got 3 mouse pads, Shawn. That's what you got there, buddy. So if you're interested in doing that, that's right. If you're interested in doing that, send an email to marketing@axontire.com with all your pertinent details, and they'll send that to you in the mail. So again, just go to marketing@axontire.com and you'll get one of those in the mail. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comp is the industry's trusted solution for transparent equipment values and auctionable pricing insights. Shawn Hackett is with Well, you're not with Boca Raton, Florida. You're from Boca Raton, Florida, and you're with Hackett Financial. So, Shawn, how you doing this morning, man?
I'm doing good. Fresh back from Indiana. So,
no, there you go, Indiana. How was that? You're up there speaking to fertilizer, some fertilizer stuff, right?
I was. We were talking La Nina to El Nino, cryptocurrency as a new monetary asset, Gleisberg cycle, really good stuff, and a lot of that stuff. Obviously, we'll be speaking with bated breath at your summit coming up here in a few weeks. So,
and oddly enough, we're going to talk about fertilizer today. What are the odds there, Shawn?
I'm growing in anticipation.
It's like synergy. It's like we're on the same page almost. All right. So fertilizer is a big thing. You know, fertilizer is what makes the world grow food and what have you all around the world. And certain crops require more fertilizer than others. I did not know this until we started talking about this, that the amount of fertilizer that's needed to grow rice. And I always thought corn was the most fertilizer intense crop on the planet, but it pales in comparison, right, Shawn? So we've seen this huge spike up in natural gas, which is a key component in fertilizer across the world. The United States obviously isn't nearly as affected by that price as the rest of the world is. We're still, you know, here's my quotation marks. It's high here, right? But it's nothing like it is in Europe and Asia. I mean, where it's just off the charts, 4 or 5 times what it is here in the United States. You look at countries like Sri Lanka, where they decided not to use fertilizer, and look what happened there. You know, their food production was next to none. Countries in Asia where they can't afford to have high-priced fertilizer, they're not seeing those kind of crop mixes going into play there. So I guess, Shawn, as you're looking at this world fertilizer kind of situation that we're in, I mean, I guess, you know, the U.S., we're going to have fertilizer, we're going to grow. We produce, I can't remember the exact number, but it's like 85 or 90% of what we use domestically is produced here in the United States. We import some of that in from other parts of the world, so it's not as big a deal to us. But when you start looking at, you know, rice production around the world, I guess how does this fertilizer situation we see now? Because it's obviously not going to get any better in 23, right? I don't see that happening, I guess. Yeah. So what are your thoughts?
Yeah, well, I mean, beyond the weather volatility, which is what we always try to focus on, and how that's going to impact production, you know, we have this situation where the natural gas arbitrage price between the U.S. and what's overseas, you know, Asia and Europe have been experiencing $30, $40, $50 for LNG, where, you know, we're at, you know, 7 and 8, which, you know, in our standards is high, but relative to what they've been experiencing for the last several years, and hence why you can see why fertilizer is so much more expensive over there than it is over here, just because the initial input for at least nitrogen fertilizer is so much higher, and we have a huge cost advantage. Now, the other issue is that, you know, as you said, you know, we produce most of our own fertilizer, but a lot of these countries in Asia and Africa specifically do not, and are perpetual majority importers of fertilizer. And given that the 2 largest exporters of fertilizer in the world, which are China and Russia, have decided that they want to keep a little more of that fertilizer at home, for a whole host of reasons. And given that the LNG price has gone through the roof, Africa and, let's say, not China, not India, countries like Vietnam, like Thailand, like Indonesia, like the Philippines, like, the countries in Africa, West Africa, they don't have the money or the access to produce or to buy and apply the kind of fertilizer that is needed to maintain production integrity that will allow themselves to produce the kind of food they need to avoid what just happened, as you said, in Sri Lanka. In Sri Lanka, they had this brilliant idea to save the world, that they were going to promote organic fertilizer. They outlawed non-organic fertilizer and then demanded that, I think it was 30% must be used to save the world. And of course, food production collapsed. The government was overthrown. They're involved in a revolution and a coup, because you can't starve the people, and you cannot reduce fertilizer and think that you're going to keep feeding 9 billion people or 7 million. How many people we have out there? It's not going to happen.
Right.
It's a pipe dream. It's going to happen. And then we have, try to remember exactly which country specifically it was, but somewhere in the Baltic states, Norway. Try to remember who it was, but the government has put a bill in place to mandate a 30% or 35% reduction in fertilizer. And then there was riots. The farmers rioted, and they're saying, there's no, you're going to ruin our business, and we're all going to starve to death. And then in China, in Canada, we've seen that they're now trying to limit the usage of fertilizer by 30% come 2030. I try to remember the exact details, but we're seeing this push, Casey, of government's trying to restrict the use of fertilizer to save the world. And I don't see how they're going to save the world. All they're going to do is kill a lot of people. I don't mean to be like, Debbie Downer at all. And, but that's the reality. The reality is you can't stop using fertilizer, or else huge amounts of humanitarian consequences are going to be the case. So to save the world means killing off billions of people. I'm not sure that's going to go down very well if that continues to be pushed out there, Casey. I'm not sure exactly what's going on, but bottom line with all of this, I think the first real sign of what it means to not use fertilizer, obviously Sri Lanka was the first country, but I think on a bigger scale, it's these Asian countries we just talked about. It's the rice production that's going to get hit this fall. When we start seeing those main harvests coming in, and we start seeing the numbers, and we start seeing the estimates saying, whoa, we're down 20%, we're down 15%, we're down 20, 30%, in certain countries because they didn't use the fertilizer, and they had some of the countries had some adverse weather. That is a commodity you cannot do without. In fact, we talked about this on your show many times. It has been the key glue that has kept the world from totally panicking on food, because there has been enough cheap available rice to offset uneconomical and unavailable wheat in the world. And so if you lose that key glue to the global food system, then we run into a situation where what happened in Sri Lanka is going to be a domino effect elsewhere. And I think that we're going to see the really first examples of what it means to reduce fertilizer this fall when we start getting those rice numbers in. And I'm hopeful that will be a strong enough message to push back on this political move to reduce this fertilizer usage. And I hope there's enough pushback from the people and the farmers that we just squash this whole concept of what's being pushed out there, because if we don't, it's going to get much, much worse.
Yep. So there's something like kind of the same topic, something like can't remember the exact number of countries in Africa, but it's like 62 or 6 or 56 or 57, something like that.
There's a lot. There's a lot.
There's a lot there. And but something like 65 or 70% of those countries so far this year have had some sort of political unrest of some sort that led to either a coup attempt or an actual coup somewhere in that mix. I guess, Shawn, as you look going into 23, as you're looking at this right now, do you see any real difference in the pricing that we've seen in fertilizer? I mean, I know it's come down quite a bit from what it was going into the planting season of 22, but do you see it dropping anytime soon? Do you see it kind of staying the same? I mean, I guess, what are your thoughts there?
Well, I mean, we had the spike, and remember, you correctly pointed out the U.S. really isn't in it. Never really had a shortage. We just had a panic.
Yeah.
But we didn't have a shortage. They had a shortage overseas for sure. And the outfit that I was with, they actually say they have too much inventory right now of fertilizer, and they're actually not getting as much bidding as they would have liked to see. But, I think, by the way, I know that's echoed from other fertilizer companies. They actually have too much product. I think the U.S. is in a little bit of a situation where we've come down. We probably could stay low here for a little while, or lower for a little while. But we are at the point where farmers start to book their fertilizer for the next year. And right. I do think that, looking at the price of natural gas, where it is and where I think it, we're moving into the winter time. So, we have another month or two that, the weather's going to cool down, but it's not going to be a big deal. Then we're going to go into winter time overseas and here. And I just have to believe that the U.S. price is going to spike again. And I have to believe that if the fertilizer price overseas spikes again, and the natural gas price overseas spikes again, and we see natural gas spike again, and we get through a little bit of this overhang, as we will, I think the U.S. fertilizer price is going to spike again. So my concept here is I think that you booking your fertilizer prices for your spring applications right now, maybe over the next couple of months, is a good idea to take advantage of the lower price. I think we could get a spike into the winter, into the early spring, and then I think we could have a big knockoff. And you might want to be looking at buying your summer needs in some type of a spring price decline. Because remember, we're talking about El Nino coming. That means big crops in South America, means big crops in the U.S. And we know throughout history, the fertilizer price, at least in the U.S., follows the price of corn, because corn is such a huge consumer of fertilizer. So if the price of corn is going to have a knockdown, into the spring and into the early summer, then I would think that you're going to get a better opportunity to buy your summer application at that point. So I think you need to be looking at your fertilizer purchases in a two-pronged strategy. Try to get some bought here on this dip before the wintertime, and try to get your summer application on a post-winter knockdown in fertilizer prices, natural gas prices. I think that probably would be a good strategy to be considering if you're a farmer thinking about what should I be doing with fertilizer. I think that's a pretty reasonable strategy to be looking at right now.
Right on. All right. So with you, I can't talk here this morning, with what you see coming down the pike, and the Glassberg cycles and the going from El Nino to La Nina and all those kind of things, when you're looking at those things, how are you positioning, like what you said, with your customers? Or how much more important is fertilizer going to be with that changes that we see happening versus what we see happening now?
Well, remember, if our weather forecast or price forecast is correct, next spring summer is going to be the major low. The one we're in now is, as we talked about, is an intermediate low. Maybe it gives us a couple of 2-3 months of rebound. We're starting to see that already. It's not a major low in our opinion, but the major low is next summer, spring, summer. Mm-hmm. And that's where you could get the bottom, in the fertilizer price, whatever that price is going to be. You're going to get that opportunity to buy very, very cheap fertilizer, because what always happens, Casey, is when you start so let's say I'm correct, and 24 is we start developing this crazy drought cycle and we get $12 corn. Everyone in the world is going to go plant corn. I'll plant corn in my backyard. I'll plant it.
Right. Okay? Right. Yeah.
And so even though I think we could have a 2-year drought, by the way, but the world is going to max out corn acres because the price is going to tell them to do so. And if they do that, then they're going to have to max out fertilizer usage. And if they get to have $12 corn, they can afford the fertilizer usage.
Right.
So you don't want to go into that 24, 25. And remember, that 2-year period in 26, you don't want to go into there not having it's just like sitting back in 2020 when we had the pandemic lows, right?
Right.
You had an opportunity to buy, a couple of years out, and that was a windfall after all the weather problems that we had and everything else, and the price took off. I see a similar opportunity next spring, summer to really buy the long-term. what I just described earlier is more of a shorter term strategy to kind of wiggle around in the current crop year. But the bigger strategy is to get you a couple of years out. And so when you're selling $12 corn, your input cost is extremely low, relatively low fertilizer price. And that's really going to be the key to a farmer making money. Is you have to, most of the time, you have to book your inputs at a different time than you book your corn price to really make the margin. If we talked about the toothpaste, concept where, the industry says, we're going to take 80% of the toothpaste, no matter how big it is. So the farmer, you're going to get this, and we're going to, now if the toothpaste gets bigger, we're still going to take 80% of the bigger toothpaste. The farmer really never gets that much more of it unless he's been able to lock in that input cost and not eat that input cost on the way up. Because if the corn price goes up, the seed price goes up, the cash rents go up, the fertilizer price, everything goes up. And then you wind up saying, gee, at the $10 corn, I'm not making a lot of money because the industry just takes it away from you. I'm not here to say that's good or bad or indifferent. That's just the way the industry operates. We could argue that there's something wrong with that, but I'm just trying to say that's how it is. And it doesn't look like it's going to change. So if that's the way it is, not going to change, you have to just make sure you can maneuver within that so that you as a farmer can make money.
Right.
And the way you do that is you buy your fertilizer and you're in the summer of 2020, and you book it as far out as they'll let you. And that's how you get the economic advantage. But you have to have an ability to see what's coming. You have to have the ability to be able to see the kind of weather that's coming, or and that's what we try to do here, Casey. That's why we were so big on it, making these 1 or 2 or 3 year forecasts, and trying to get a pretty good idea. Nothing's perfect, but get a pretty good idea of the pathway that we're going to take. Because if you have a good enough idea of the general pathway that we're heading into, you can make some good longer term decisions. Without that, you're going to just continue to always struggle in reacting to the market instead of being proactive to the market. And we're always trying to be proactive if we can with the stuff that we do. So
right on. Okay. Real quick, kind of close it up here. You follow the rice to wheat ratio quite a bit and what that looks like. As you're looking at it now, Shawn, what are your thoughts there?
Well, I mean, the wheat price has crashed and the rice price hasn't moved down at all. So that means that the ratio has improved, right? I lost you there, Casey.
I'm still here.
Oh, okay. So we were at a record low rice price relative to wheat price when wheat was up at that 13 to 14 area. Now that we're around the 8 area, we were at like 1.35 to 1, meaning that rice was trading, at only 1.35 times wheat when wheat was at its high. That was a record low. And so the wheat prices crashed. Now we're at 2 to 1, roughly 2 to 1. Historically, 2 is still on the low side of the range. Usually the average is 2.5, and rice can very, very regularly get to 3 times wheat when it gets overpriced relative to wheat. So our view was that even if the wheat price crashed, we thought that the rice price was so undervalued that it would still be able to withstand that and not really fall much. And it's exactly what's happened. I mean, rice is not far off from the highs. So if we're correct that the grain prices are bottomed and the wheat price is bottomed and the wheat price is going to start to go up, and we're correct about Asian rice production being under pressure as we go into the fall, we could have a situation where now the rice price begins to at least maintain that ratio, meaning it won't give it back. And it's possible that it could actually add to that ratio. So the sweet spot for the rice price could be this period from right now into the fall, into the fourth quarter, when it has a real reason to expand on its price relative to wheat. And so we think that the rice price is on the verge of repricing to a different ratio, not only to wheat, by the way, but to all of the grain markets. And so we think this is still an interesting place, and we're kind of gratified that the rice price did not fall like everything else, and it validated the reason why we thought it was one of the few places that there was value in the grain markets when we were at the highs. So
looking at So you're thinking that the rice price is going to extremely go up in price? Is that where you're at?
Well, let's just say, that, let's say I'm correct that the grain prices have a 50% retracement of the decline, something like that.
Mm-hmm.
So if wheat went from, let's just make it easy. If wheat went from 14 to 8, which is, I know it's not quite, but say 14 to 8. So, that's an 8-point decline. So let's say wheat goes up $3 or $4, let's say back to that $10, $11 area, which is resistance on the charts. And let's just say that rice maintains the 2-to-1 ratio that it's at right now, just maintains the ratio. Then, you would have rice $20 plus on the US price. But if let's say we moved up to 2.5 times ratio, we could see wheat back in the mid 20s, which was the highs that were set a few years back and the highs that were set back in 2008. So I just feel that the rice market was a huge underperformer on that big move up into February and into the spring. Okay. And usually when the next iteration comes, there's a new leader. Okay. Right. Somebody takes over as the leader, and who was the leader takes a back seat. And usually what happens, they call it the dogs of the Dow. The strategy was that whatever the worst 5 performers were in the Dow Jones Industrial Average in one year, if you bought them the following year, they would outperform the other Dow members the following year just because they underperformed the year prior. I mean, that was a strategy that people deployed for years fairly successfully. And so my view would be, given that rice was the dog of grains in the first move up, it could easily be the leader. And I think that the catalyst and the reasoning for it is the two things we've discussed: this realization that lack of fertilizer usage is not going to cut it this fall, and El Nino means drought in Asia.
Yeah.
And drought in Asia with a lack of fertilizer. Remember, we're going to talk about that this past year was not drought in Asia. They had plenty of moisture. But if we get knockdowns in yields in Asia because of lack of fertilizer, and now you talk about a drought and lack of fertilizer, we could have another knockdown in production significantly for the next crop cycle, unless there's a dramatic change in price and access to fertilizer in that period of time. So I think there's a couple of really interesting catalysts that's going to allow the rice price to really outperform other grain markets and reestablish its price level to a level that can begin to maintain or put back in the correct economics to get production going again.
Right on. Interesting stuff, Shawn. That's it'll be interesting to watch how this goes, because this is going to be one of those key functional times in history here as to what happens with what, and the rest of the world doesn't have the ability to produce the way the United States does when it comes to agricultural production. And like you've talked about, throwing one little kink out there into that system has a pretty big ripple effect across the entire world's agricultural market space.
Well, for whatever reason, the U.S. is extraordinarily fortunate that if we want, we have enough energy. We could produce enough energy here. If we wanted to do it, we could produce all the energy we needed. We have the ability to produce all the food we need. We have the ability to produce most of the fertilizer we need. We're very, very fortunate that, we have enough natural gas to produce all that we need. Europe does not have enough energy to produce what they need. China does.
Background right there. It's crazy.
China does not have enough energy or food to satisfy their country. Most countries are not in the position where they're self-sufficient in these key inputs that are critical for humanity's survival. And that's what's really disturbing about breaking apart the global agricultural system. We had a system where everyone trusted everybody, everyone was funding everybody, and everyone was taking from places that had enough to places that didn't have enough, and we were keeping everybody overall taken care of. Yep. But now that we're getting into this situation where no one's trusting anybody, everybody hates everybody, we're all going to war with everybody, and we're now withholding supplies from everybody. No one can trust that they're going to get it from everybody. We're now breaking down this global trade system, and now those are countries that don't have enough are really against it. And the Sri Lanka is a classic example of something we're going to see more and more unless we can put this genie back in the bottle. And interesting, on this presentation we did yesterday, Casey, we go through what's called a civil unrest war cycle. It's a 53.5 year cycle. And you talked about, how Africa's going through these, escalating civil unrest and coups. I don't know why this cycle exists. I just know that we went back 300 years and found that this war cycle and civil unrest cycle is repeats over and over again. It just seems like maybe the way the world functions, we just hate each other every 53.5 years. I don't know what it is, but that cycle reaches a crescendo in 2026, meaning we're in an escalating civil unrest war cycle that hits a crescendo in 2026. And periods of war, whether it's World War I, World War II, whether it was the Civil War, whether it was, the Vietnam War, you can go down the list, have always meant significant dislocations of trade flows, significant government interventions, and escalation of wars, and significant inflation in food prices, bar none. It's not a forecast that we're excited about, because it means what happened in Sri Lanka, which is extremely unfortunate, is going to happen elsewhere. But that's the cycle, and people have to be aware that these cycles repeat over and over and over and over. And it's just interesting that, now we have Russia going into Ukraine. Now we have Taiwan and China. You can almost feel that we're moving into this cycle again, Casey. You feel that we're escalating into something bigger here. And, my job is to always look out for the farmer, for the producer, and try to give him the best ability to move forward. Because at the end of the day, we need a healthy, prosperous farmer to keep producing food everywhere in the world to mitigate some of these risks that we're talking about. And if we're going to have an escalation of currency inflation, weather inflation, weather volatility inflation, and geopolitical civil unrest war inflation, they need to know that.
Right.
Because they need to know not to sell the first dollar up in corn in 2024 and to let it run like they sold $4 corn in late 2020. They need to be able to gain that economic advantage and keep producing that food, because we desperately need all hands on deck to mitigate some of these unfortunate risks that, for whatever reason, humanity seems to go through over and over again.
Yeah.
So,
right on. Well, good stuff as usual, Shawn. Folks want to reach out to you and get more information about what it is you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. We have TV interviews, podcasts, white papers, sample reports. We even have mouse pads. No, just kidding. So for everyone to take a look at what we do to see if we can be of value to your listeners.
You could have like the bushel to metric ton ratios on stuff like that on your mouse pad. Right on. There are 54 countries in Africa, by the way. I Googled it.
It's a lot.
That's according to the UN. So who knows if that's accurate or not. So
yeah, when you look at a map of Africa, you wonder how the whole thing works. It's amazing.
Yeah, it is. It is quite amazing. So
it is.
I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. Go at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast and check out the video version of this on the Moving Iron LLC, the Moving Iron Podcast YouTube channel. Check it out there. My friend Alex Yachenko has made it back from Ukraine. He's here for a couple more months, and he's going to go back over to Ukraine. So talked to him yesterday, posted a picture of him. So if you're interested in helping Alex continue his humanitarian aid efforts, there's a show link here to his GoFundMe page, or you can just go to GoFundMe itself and help Alex help Alex transport humanitarian aid from Poland to Ukraine. So check that out there. If you want more information about the Moving Iron Podcast, go to MovingIronLLC.com, where you can find everything Moving Iron related. If you want to come to the Moving Iron Summit, that is drastically waning there. We've got about there's about I think about 10 or 12 spots left open. So if you're interested in doing that, hit me up at Moving Iron Podcast at MovingIronPodcast.com, and I'll get you more information, or just fill out the form there in the upper right hand corner where it says Moving Iron Summit. check that out there. So with that, I'm Casey Seymour and with Shawn Hackett. Let's go with some iron, folks. Out.
Moving higher in the 21st century. Hardworking people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.